let's take a look at our 60-minute chart of the S&P 500, and you will see in here that we have had another week where it is every day basically moving sharply to the upside. We'll take a look at what the news items were that moved it up this week. The gray area you could see here Sunday overnight and the Monday morning saw some selling pressure coming in, but the techs start to jump and save the market from a pullback. The Russell was weak early in the week, but that did change. So you had this up day here on Monday. Overnight here on Tuesday, Bank of Japan lowered their QE by a tiny amount. The yen exploded on that news and the bonds dropped. That knocked the S&Ps down. But that, of course, didn't last. Buying came in. As we get steeper interest rates, we get financial stocks that are starting to move up again because of hope for the higher yields bringing bigger earnings to them as they can get more money for the money they loan out. So the financials led the market up in a big way here on Tuesday. China was this news that there may be a policy change coming of buying U.S. Treasuries. The bonds moved down sharply, as does the dollar. Gold starts to pop, and you get this kind of big overnight decline. But then as airlines, banks, and retail start to lead a rebound, the only down day of the year so far is right here. And you could see, for traders, it was basically an up day because the market just, continued up. ECB minutes come out here. They were more hawkish. That's not a surprise. PPI down 0.1%, but year over year up 2.6. That's hotter than the Fed wants it, doesn't it? So here you have another day where they move up almost all day. So you had that Monday, Tuesday, Wednesday, Thursday, and Friday. And Friday you had this drop here as CPI was hot, 0.3%. Facebook comes out and says they're making some changes, and Facebook gets hit. So you get this decline, but that doesn't last. Even Fed Dudley and Kaplan warning on overheating doesn't affect the market in any lasting way. And in the first 2 hours of the day bring in a ton of buying, as you could see. And again, we're seeing the markets move up, this time with the NASDAQ, which got hurt first with Facebook news, getting bids coming in Amazon and Apple and other stocks, and that lifts lifts the market the whole day. And the retail stocks really helped. Had some pretty good sized gainers in retail stocks here today, with even lowly little Sears up almost 10% on the day, and Dillard's and other retails like Kohl's and Nordstrom's are all gaining like between 4 and 8%. So the retails really helped in here, and they got a really nice bounce, as you can see, and helped the market get up. I want to take just a few minutes to show you our Level 3 membership. This is really an amazing offering that we have. We look at 400 symbols every single week and do analysis on them. And then that's a huge universe to trade. We cull them down to the 80 best traded symbols. That's the widely held, the best optionable stocks, ETFs, and futures. 80 symbols. And our Level 4 members get those charts every single week. But some people don't want to have the charts, and some people would like to have the information in a clear format for them to see. And so we have created a table that our Level 3 members get. Of course, our Level 4 members get this also, in which we put all of our analytical information on this one table on all 80 symbols. It's an amazing, easy to use table to look at. The symbols that are on here are all of the ones that you look at probably on a daily basis, and we rank them in 3 different time frames, plus our option bias indicator. I'm going to show you that table right now. So I'm going to give you some idea of what this looks like as our members receive this each day and what this all means. This table is a really comprehensive look at all of our analysis. So you can see in here, when you look at, let's just pick out Amazon right over here, this is the our long-term analysis based on our formula for long-term momentum. This is our intermediate term analysis based on our intermediate cyclical analysis. This is our short-term analysis based on our proprietary indicators for short-term market condition. And this is our option option bias indicator, a phenomenal indicator which shows you when there is positive momentum and a likelihood, or negative momentum, or a likelihood of a reversal coming. And I'll show you what that looks like also. So here in the case of Amazon, this is a long-term bullish. You can see that. And then this P3 reading right over here says it is the most positive based on our cycles. Short-term, it's positive, and our option bias indicator says that your option positions will be favorable to have them in a long side bias. This is the best, strongest reading that you can get. Our Boeing indicator, just you see that little downgrade, has now gone down to P2, and that's because after all this long rally, it has become slightly overbought. Hence, our P1 indicator in the cycles, which says, you know, it's still rising, but it's getting kind of late. When you look at Apple here, long-term positive, intermediate term, notice the yellow and P1, that says that the cycle indicator is starting to turn over. In other words, there's risk that the advance that Apple has had is ending. It's still positive over here on the short term. One more thing to look at here, look at American Airlines. First of all, notice the end there. We put a note, and every time we put in a new note right over here, we then indicate that what we see that has changed in the reading. And in this case, our option bias indicator has gone to P1 orange, which says a high likelihood of a reversal. It's been moving sharply up, so it has positive momentum, but it is at an extreme and likely to reverse in the next several days. In a choppy market, the P1, this indicator, P1 or N1 orange, is giving us 75% probability of a reversal within a couple of days. In a trending market, it's more like around 62%, and those are still phenomenal numbers. You can see we do this and update this every single day. Again, if you're an investor, you'll be looking at these two right over here. If you're a swing trader, you'll be looking at probably all of these. And short-term traders will be looking at the short-term and option bias. So it's just something for everybody. As I scroll down, you can see in here everything that we cover, and we do put in trade setup. So you can see in here that, you know, if you look at January 9th, we had a what we call level 1 long setup that occurred in the GDX market right over here. And you can see our indicators, well, the long term is neutral, but we have positive all the way across right over here. So we put in that setup here on January 9th. And when we take off a setup, when we say it's no longer fitting for an entry, then we gray it out. You can see right there. So a ton of information. There's all 56 stocks and ETFs. And then as we look down here, you can see the 24 different futures and future ETFs that we do a few of in there also, and you can see those indicators in there. You'll note that we have recently been very bearish in the bond market. Note these readings in the bond market right over here, all these red numbers, and that has been absolutely fantastic. We've been bearish in the soybean market. It's been lower. You can see that going on there, and we've been bearish on the dollar, and you can see N2 negative on the cycles, N2 negative on the option bias indicator, which is slightly oversold. And there you can see there's just incredible information on here. And this is all of the work that we do on our charts all put onto this table. It's amazing. I'm going back up to the stocks just so you can get an idea in here and how it even helps you understand the market. In that, look at all these stocks, the long term. There's only a couple of them that are still long term negative. One is Schlumberger, one is Pan American Silver. And if you look in here on the cycle indicators, right here you can see all of the positive to neutral readings. Only one that's negative right there is Intel, also Avago. Those are giving you N1 readings, which are mildly negative on the cycle pattern. So, you know, if you were long Avago as a long-term holder, you would say, okay, it's still long-term good, but it's in an intermediate term correction that's likely to continue. If you would see the shorter terms in here turning red on Avago, then you would have some sense that, well, the correction is accelerating on the downside, and that the momentum of the shorter term is also joining the intermediate term. So there's just a ton of information on here, and we put out these setups maybe a couple times a week. When the market gets choppier, we'll be putting out more setups. During the time of the more choppy market, we were averaging about 62% favorable entries to about 28% unfavorable. It was phenomenal. We're slightly less than 2 to 1 right now on our favorable setups to unfavorable, which is still fantastic. Our last 10, for example, you could see that on our front of our webpage, was 9 favorable setups, 5 unfavorable, and 1 that was neutral. So it was 9 to 5, still sticking somewhere close to that 2 to 1 ratio that we want to be. This is an unbelievable offering that we have here. You could see all of the amount of information we put in here. Can you imagine doing the cycle work that we do on 400 stocks, culling it down to the 80 best traded stocks, and then putting that information for you every single day onto this chart? It's incredible. This table will really help you a lot, especially the option bias indicator, which is phenomenal. You can have this to try if you wish for half price for a month. What do you get with the half price? Well, you starts out, all of our level 3 and 4 members can write me emails, a reasonable number, to ask me questions about this or market conditions or trader issues. So we allow 3 a week as far as that goes. You'll be getting this table and our with all of our rankings in long-term, intermediate-term, option bias, all of the notes, the setups, all of those on this table. You'll be getting a notification each morning when it's sent out, so that you know to take a peek, and you will also get our library of over 250 trader videos. What an amazing thing. And I'm going to offer you this for a month to try in this trial for $43. I don't know how you can avoid doing this with all of this information. There's a little bit of a learning curve as you get used to it. You can ask me questions, and I think that you will really love having all of this information. You want that for half price, $43. Write me at slim@askslim.com. Ask me for the special 1 month level 3 trial link, and I'll send that to you, and you can begin the fun of seeing all of our great information. I'll take a look here at SPX, the S&P 500, and as it moves up to an important level that I told you it would not get to. Up to this major fib confluence area right up there, there's a fib extension confluence. This comes off of 3 different cycles right up over there, and I honestly didn't think it had a chance to get there, because I thought, you know, often these things are targets, but when you have that much going on, it would have a hard time. But it didn't have a hard time, and now it's important. I said this week would be a down week in the stock market, which again was not right. The lengthening of the cycles continue to happen, as happened here and here and here, and excuse me. This is really the spot where we expect it to peak, and you can see in here that our projection is for it to come down out over this way and into the January 25th or 24th, 25th date is really what we're looking for. So we see this in the S&P 500. We see this in the NASDAQ. Momentum super strong. You could see that as that 13-day moving average continues to give it the support all the way up in the S&P 500. This is a 2-week period out there. We're going to be looking for a pullback over the next 2 weeks to the 2740 to 2728 number, and that is a bullish comment by me. Falling down to those levels is bullish because that is a minor decline in here, and then we'll be looking for something major after, well, coming out in here in late February. But this, we're just looking for this minor drop here over the next couple of weeks, and we expect it to round over and to move down this week. So we're going to call it a down week in the face of upward momentum, but only a minor down week, as it's going to be hard to keep the buyers from coming in the markets because they're so attuned to buying. Here you could see the NASDAQ, the same thing. The target's in here over the next couple of weeks, 66.28 down to 65.77. Again, there's a fib confluence area right up over there and a big 161.8. So this should be the area that it rolls over also, and no selling. Even here late in the day on Friday, when the market was starting to come down in the last hour, the buyers started to come in again. And right now we are 30 minutes from the close on Friday, January 12th. That is a look at the NASDAQ. And if you want to know about the VIX index, take advantage of the specials that we offer, because I did a really interesting video on Thursday comparing the VIX and the S&P 500. And there is a strong message of something changing in the markets coming in just the next couple of weeks. So while I say I think we're going to get a decline and then another rally and a minor decline, there's a volatility change that's due. And you're going to want to see this, because I do a great historical comparison. And it talks about the potential for the S&P 500 actually having a correction. Believe it or not, I would say that. I hope you enjoyed that video. Be sure to subscribe to our YouTube channel, and also go to AskSlim.com and become a Level 1 member. No cost to you, and we have some special videos for you to see. I know you'll enjoy them. I've been